Hello, and you're welcome to Global Business Insights, where you get more details on the main business headlines across the globe. Global stocks are more upbeat, trading mostly higher as last week's weaker than expected US job report helped prospects for an earlier than previously thought interest rate cut from the US Fed. It seems more attention is now on Q1 earnings again, and we do get a few, including from Uber, Airbnb, Warner Brothers, Walt Disney. BP will announce tomorrow. Honda will also announce on Friday. European stocks were also trading higher, apparently latching on to last week's Wall Street rally. On data, in Europe, we also got the S&P Composite Final Purchasing Managers Index for the Euro area, showing business activity in the bloc last month expanding at its fastest pace in almost a year. The index jumped to 51.7 for April from 50.3 in March. Some good news there. Shares of iPhone manufacturer Foxconn spiked after the company reported a 19.03% year-on-year rise in April revenue. Foxconn recorded $15.83 billion in revenue in April, also well ahead of expectations. Foxconn said its cloud and networking products delivered strong growth, while its smart consumer electronics and computing product segment also did well. And Chinese President Xi Jinping is in Paris as he begins a three-nation visit through Europe to improve ties, even as trade tensions continue to mount. It's his first visit to the EU, the European Union, in 5 years. Xi will visit also Serbia as well as Hungary. The European Commission today approved US Steel's $14.9 billion buyout by Japan's Nippon Steel, saying the deal does not raise competition concerns despite the political opposition that it faces in the United States. This week we hear from central bank officials in the US, John Williams, that's the president of the Reserve Bank of New York, and Thomas Barkin, CEO, Federal Reserve Bank of Richmond, all speaking later today, as well as ECB's Dr. Joachim Nagel, president of the Deutsche Bund Bank. CEO of the Federal Reserve Bank of Minneapolis, Neil Kashkari, also speaks tomorrow, and we hear from Bank of England Andrew Bailey on Thursday. So there are quite a few opportunities to weigh into the constantly changing narrative on timing and frequency of future interest rate cuts. Shell has confirmed its intentions to exit shareholdings in its South African retail transport and refining operations. The decision was made after reviewing its downstream and renewables business across all regions and markets. The Bank of England will announce a closely watched monetary policy decision on Thursday, also expected to keep the target interest rate unchanged. After the Conservatives were hammered in local elections, we look closer at how Sunak may want to tweak his economic posture and whether he can expect any help from an independent and data-dependent Bank of England. And in Nigeria, a former Vice President Atiku Abubakar has alleged that President Bola Tinubu is placing his personal interest above public interest in the award of contracts, specifically the award of a multi-billion naira Lagos-Calabar coastal road to the Chagoury group, for which he is said to have personal interest. Europe is hoping it sees more reciprocity in access to Chinese markets and commitment to open markets that will allow European companies to exploit opportunities in a fairer competitive terrain in China. A reciprocity that will, of course, produce fairer outcomes for both Europe and for China. China also wants to normalize relations with Europe as well, being China's second largest trading partner. Macron is calling for an update to adjust policies from a present situation where China's excess capacity, backed by subsidies in many areas, enable massive dumping of goods such as solar panels. Also, many ongoing investigations into spying and state-sponsored cyber attacks from China may also be on the agenda. This is as Europe wants more investments from the world's second largest economy. With pressure from the US to watch China closely, Europe has said it is pursuing a de-risking policy and not delinking, especially at a time when the possibility of a Trump presidency may also present new realities that Europe would have to manage. In short, it makes little sense for Europe to push an approach that helps Washington's bid to isolate China and restrict China's access to Western technology. Similarly, China cannot help but insist that it will only invest in friendly shores, putting Europe in a difficult position of straddling two conflicting opinions. China's economic carrots have worked well in the past, and Macron has to find reasons to remain close to Beijing. In a recent interview saying, "Let's be clear, I'm not proposing to distance myself from China, whether it's about climate or about safety. We need the Chinese." What it does not say, which is probably true, is that given the tepid economy and competition for investment flows presently favoring the United States, Europe needs China now more than ever. The Bank of England will on Thursday present a clearer signal on whether it will begin to cut rates in June. Why is this so important, especially to Rishi Sunak, who is just barely clinging to power as Prime Minister? Whatever is decided, even in the unlikely event that we get a rate cut, there is a lot of uncertainty on what a rate cut could actually mean. Indeed, lower interest rates tend to stimulate the economy. The UK is, however, still expected to suffer from low growth in the coming years, whatever the rates are. It takes time for the precise effects of rate cuts to be felt, let alone be quantifiable, time that Sunak does not have. With losses of over 450 councillors at the upper end of the worst expectations and almost half of the seats they were defending gone, Conservatives continue to believe that all they need is a little more time for British voters to see that their plans are working. As long as the satisfaction with the present trajectory continues to spike, all the Labour Party needs to do is simply wait and hope the Tories do not change course. Let's be clear, disliked policies do not mean policies are wrong, and listening to the IMF more than unlearned voters has a ring of altruism to it, but it could also be an act of self-sacrifice from a political perspective. The Bank of England may continue to be careful in bringing down interest rates, especially given what we've just seen in the US, where the data suddenly suggested the need for extra caution in terms of timing of cuts, despite recent weaker US jobs data coming out, causing a rethink. But the data and prognosis in the UK looks more promising. According to the UK Office for Budget Responsibility, they see easing inflationary pressures and expect a sharper fall in interest rates than initially thought. Real household disposable income per person is also expected to recover its pre-pandemic peak by 2025 to 2026, 2 years earlier than in its November forecast. But 2025 may be way too late, and the likelihood is that the Labour Party may reap all that the Conservatives have sown in tears. To the BOE on May 9, we get important clues also on where the bank sees inflation going this year. Last March, 8 members of the MPC voted for no change, only 1 for a cut. Now, are we going to see more policymakers asking or voting for an easing? Until recently, the US Fed was also expected to take the lead and start cutting interest rates. Now, the ECB could be the first to cut at its June meeting as inflation continues to fall in the Eurozone. In the UK, the next 4 meetings that will take place in May, June, August, and September are key to helping or nailing the coffin on Sunak's hopes of re-election. Chancellor Hunt is likely to push a tax hike ahead of the elections to appease unhappy Conservatives, and an unfunded tax hike could mean higher costs of borrowing as yields go up. Meanwhile, as Tories nurse their wounds and put up a strong face after a bruising defeat, Rishi Sunak was told by Conservative MPs yesterday to show some vision and start digging his party out of the hole it was in after a disastrous set of local election results. But he should not count on Andrew Bailey to help. At a time when the president is touting a different Nigeria, open for investment and business, where law, order, and transparency means zero tolerance for corruption, the government needs to reassure Nigerians and set the record straight on allegations that this major contract did not follow due process and that there were no bid documents to support the award. The already known close relationship between President Tinubu and the Chagoury group implies that a transparent, competitive process must be openly demonstrated to convince Nigerians that public interest superseded private business interests of the president and his family. Tomorrow, Chief Executive Officer Tim Cook will introduce major upgrades to the iPad Pro and iPad Air and new versions of the tablet's accessories. The online event, dubbed Let Loose, will last a little more than half an hour, starting 7 a.m. Pacific time, a bit too early for Americans, but timed to catch Asian viewers before they go to bed. The star of the event will be a new iPad Pro with an updated design and crisper screen, the first iPad to get an OLED display, organic light emitting diode, the technology used in the iPhone since 2017. In addition to improving the image quality, OLEDs allow for thinner devices, and Apple is expected to slim down the Pro tablet accordingly, and may also include Apple's first M4 processors. The iPad Air, however, that's Apple's mid-tier tablet, is getting updated as well. The big story here is that Apple will add a second largest screen option for the first time. Updated accessories will also feature an updated revamped pencil which can be squeezed to conduct certain tasks. Also to be unveiled is a more durable aluminium updated Magic Keyboard. That's a piece of equipment that serves as an iPad case and includes a keyboard and small trackpad as the iPad 6 to be the alternative to the laptop. And there will be news on AI-powered features and teasers on what is to come, such as cheaper versions of the 10th generation iPad. Crude oil futures rose today as Israel warned that an invasion of Rafah in Gaza may be imminent, which analysts say would mark a new dangerous escalation in military operations in Gaza. Maersk also said disruption to the Red Sea container shipping sector is rising, also forecasting this will cut the industry's capacity between Asia and Europe by up to 20% in Q2. Brent crude standard is up 0.7%, still under $84 a barrel as we speak. Now let's look at how African and European stocks closed the day. The Nigerian Stock Exchange All Share Index closed down 0.89%, while the Johannesburg Stock Exchange All Share Index inched up 0.46%. Looking at European indices, the DAX is up 0.96%, closed. Caron also closed 0.49%. FTSE 100 also up 0.51%. US stocks still looking up, mostly positive as we speak, though the Dow has given up much of the gains that we saw earlier in the day. Dow, as we speak, is up just 0.09%. Nasdaq is up 0.59%. S&P 500 is up 0.52%. Still, you can see that all stocks are apparently in positive territory, at least mostly. Well, that's it from me on Global Business Insights. This is Bodio Shosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.